Following that, we have a head-to-head discussion on whether tokenization has proven itself to be a successful technology. Let's welcome our speakers for this engaging discussion from two different perspectives. One from an incumbent bank, Standard Chartered, represented by Dr. Stephen, and one from new challenger, DGFT, represented by Mr. Henry. The speakers are founder and CEO of DGFT, Henry Zhang, Head of Digital Assets at Standard Chartered Singapore, Dr. Stephen Hu, and the moderator, advisor at Fintech Association of Malaysia and board member of Webull Malaysia, Farah Jafar. Ladies and gentlemen, please give a round of applause.
Thank you. Gosh, it's 12 o'clock and you're not having lunch yet, so that's good. It's a good sign. First and foremost, I'm going to thank SC on behalf of the entire panel, and we can be done with that. Now, I'd like to explain a couple of things before we start the conversation. When you see the title of this panel, it says, Making the Case for Tokenization. I just want to be clear to everyone that everyone sat on this platform, it's all converted. We're all converted to tokenization, digitalization of financial services, and everything else, because all of us are TradFi, hardcore TradFi guys. So thank you very much for joining us. Thank you very much for staying back. I'd like to actually allow Henry and Stephen to introduce themselves first, and then we get into some areas of conversation that we want to explore. But first and foremost, the key difference between these two gentlemen is that Henry is now representing a purely digital native platform, and Dr. Stephen is SC, which is probably Standard Chartered, not Securities Commission, to be clear. Standard Chartered is probably, in my personal opinion, one of the most forward-thinking legacy financial entities there is out there. So, Henry, maybe we start with you.
Yeah, thank you. Thank you for joining us before the lunch. I'm Henry. I'm now the founder and the CEO of DGFT. DGFT is a marketplace. It's an exchange. DGFT as an exchange is for security tokens, not for cryptocurrencies. Number two, DGFT as a platform is built on so-called DeFi infrastructure. So we are on-chain. Somebody refers this to more like a DEX, decentralized exchange. Number three, DGFT is a licensed on-chain exchange for security tokens. We have a presence in multiple countries, but we got a license, first set of license from the Monetary Authority of Singapore. So we have two licenses, one for the primary distribution, second, another license is for the secondary trading. So DGFT in this regard is probably the first one, and as far as I know, still the only one as a licensed DEX for security token by a major jurisdiction. By background, like Farah just mentioned, that I'm converted. So I've been more than 20 years in the traditional finance, mainly from Citibank and Standard Chartered and East West Bank. So I'm converted because I believe this is inspired by the vision for the future of next generation of digital finance. It is supported by the so-called technology development. Now we call the next generation of internet. That's what we call the Web3.
Yes.
So this kind of a novel technology innovation does not happen every day. Usually it is about every 20, 30 years. But when these new things happen, it is still the early stage of so-called Web3. But when these new things happen, the impact will be huge. That's why I'm inspired by this vision to be converted.
Thank you. Stephen?
Thank you so much. My name is Stephen Hu. I run digital asset for trade and working capital business at Standard Chartered. Standard Chartered is a global bank. We are also one of the top 5 trade banks that support the growth of the real economy, have a presence in more than 50 countries across the different continents. And as a result, we support our corporate customers to move their money on a cross-border basis to support their growth of their supply chain. And as a result, we actually have a large balance sheet, and actually that is what we call the trade finance business. And my mission in trade business is to make this trade finance asset available to everyone. This is something currently is only limited within financial institutions and certain part of the institutional investor. Is a very interesting, a new asset class, which I believe tokenization can play a key role to democratize the access to asset class and make it much, much broader available with a broader range of the investors. So I really look forward to the conversation today and how tokenization actually add value, not only from a capital market perspective, but also adding value to the growth of the real world.
Yeah. And the other thing that we talked about earlier when we were preparing for the panel is that actually when you look at inclusion and the democratization of markets, it's not just at the retail level, right, Stephen? There is a whole swath of businesses out there that can benefit, aside from just private markets that Rani was talking about earlier, but really, you know, SMEs and upper SMEs, in order for us to all have a really inclusive finance system. Now, gentlemen, challenges in adoption of blockchain technology, tokenization. I want both of you to talk to the idea of the challenges from a traditional legacy player, which is SE, and DGFT, which is not, digitally native, as it were, right? So what have been the challenges in adoption for the both of you? Either one, please.
I think the tokenization market at this moment is still relatively nascent. So if you look at the market size, if we exclude the stablecoin, the market size of the tokenization market is roughly in a single digit of the $1 billion. And if you compare to the existing financial universe, that is still quite limited. So I think one of the key challenges to scale up this entire new economy actually is to get the right incentive for the different players, not only from the investor, the demand side, but also from the supply side. So if you look at the kind of variety of the asset that is being supplied, it's still relatively limited to treasury bills, to money market funds, you know, some of the most straightforward asset class, which actually have, you know, the investor they're familiar with. But actually, in order to grow that, you need more variety. The investor, they need more options for them, it's optionalities to invest. And then that's the part that I believe the bank actually have a critical role, because the bank have a large balance sheet and a continuous supply of the asset actually can be pumped into the ecosystem to boost actually the growth of the ecosystem, right? I think the second kind of a challenge I can see is, as an incumbent, there is a certain incompatibility between the on-chain blockchain ecosystem to the existing legacy system that we run. Our system is anything but real-time interactive by design, right? So, and look at actually the mainframe system, the largest innovation in fintech that we have is built in the 1970s, and it is based on a store and forward mechanism, and is based on actually batch processing to improve the efficiency, solve the right problem at that point of time. But however, the world is moving digital, and the crypto digital asset ecosystem investor, they look for the younger generation of consumers, corporate, they look for real-time, continuous interactive experiences, something native in their heart, and how to get the legacy system that we have to be compatible with the on-chain ecosystem, but also from both technology but the user experiences will be the key here.
But do you have internal pushback?
I would not say pushback. I think unlike some perception that traditional financial institutions are resistant to that, but actually there are quite a lot of excitement about this new space, because primarily it's driven, it's actually coming from the client demand. And we have seen increasing client demand, but internally we need to figure out a way that can fulfill that increasing demand within the constraint that the financial institution that we have. And that includes set up the right risk management framework from a digital asset perspective, have the right governance model in place to make sure it is correspond to the right level of the governance that we need, but also at the same time to deliver a product and services that can fulfill their need within the regulatory guardrails, and to make sure that investors are protected.
So it's client-driven?
It's client-driven.
It's client-driven. And Henry? Clearly, there's a market out there for DGFT.
Yeah, I hope so. And I believe so, but just when and how. This is, I would say, add on what Stephen mentioned, right? The points I fully agree. You need to have a good supply of the assets. But on the other side, especially when there's new innovations come out, especially so-called big innovations come out, market education or the adoption is always slow, not quick. Look at the recent decades, right? The new things come out, actually not very, very quick. No matter we look at Amazon or Netflix or even Apple phones. Apple phones is not the first day hit everything. So that's always. So of course, from the market player perspective, I just hope this period of time not long, too long. But it is a matter of fact of a challenge. When you see the people, especially the big innovations, which means something you're not get used to in the past. So people don't feel the urgency to use it and feel hesitated to use the new things. Let me give an example. Maybe for everybody in the room, right? How do you listen to music today? Mainly the streaming, right? The streaming, Spotify, or some similar kind
Apple
of things in the different countries. When did you buy your last CD? When did you buy your last CD? Most of people will say, if I forgot, I still have CDs. Most of people still have CDs in the storage, in the home, but you just forgot when did you buy your last CD. But definitely not very long. But now almost everybody, or mostly, we listen to the music from streaming because it's so easy, right? But another question is, before we have streaming, do you complain when we grow up, right? When we grow up, any period of time in our past history, do we complain we don't have music? Actually not. Before streaming, we have CD. Before CD, we listen to cassette. Before cassette, we listen to radio. We listen to radio. Even before we have the radio, we have some other, these are black vinyl things. So in our life, we never complain we don't have music. And we're happy for the music or the entertainment we're receiving as of today until something new happened.
Yes.
Until something new happened, and we think this one is much, much better. And then we even didn't notice how we gave up the previous way.
Well, what's interesting in your example is that if we take it and align it to where we're seeing the markets today, the exponential adoption will be exponential, right? It will be really, really fast. But what's interesting to hear is this. Stephen's coming from a legacy bank, and he's getting pushed from client demand, right? And Henry is a digitally native platform, and what he's asking for is education, 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 right? So at the end of the day, what I'm getting from this conversation is that actually out there, everyone's looking for digital alternatives in any way, shape, or form in order to make their financial streaming life, Henry, to go back to your example, more convenient. And until we all get to the point where we understand that this is going to be the de facto new normal, there will always need to be education, right? And that's a given. Now, existing tech and blockchain tech, right? Is there a problem with integration and proficiency, and what is the missing piece? How can we make sure legacy tech is migrated or speaks well to smart contracts and blockchain? And another element, how does the whole AI element feature into it? Would either of you want to take that first?
Yeah, maybe I just try to contribute some points. When I refer to education, it is not different from the education of like a high school to college type of education. You have to push the people to learn. When I say the education is definitely you cannot push the consumer to learn the things before using the commercial things. When I say the education is more for make the people aware and encourage. On the other side, then back to your question, Vera, is the technology, processing, etc. I would say this moment, it is not good enough. Not good enough. Maybe I address this question another way is say, if we all believe in the future in 5 years or 10 years, just like in late 1990s when we talk about the internet, people are very confident to say about the internet will change the world in 10 years, but the people will have a very, very different views or uncertainties about how the internet will change the people's life in 10 months. Here, same, we all believe in so-called Web3 blockchain base can change the financial market in 5 or 10 years, but we are very uncertain in terms of what will happen in the next 5 months. To address this question, I would rather to say what will be the enablers, what will be the key enablers or catalysts to support the mass adoption. More and more people are interested to do it. You cannot force the people to use it. People only see the benefits, they will start to use it. I just quickly mention 3 key enablers. Number 1, I would say technology. We have the technology is pretty to a certain level, but it's not perfect in terms of convenience, speed, cost, efficiency, security. Number 2, I know we're talking enough about regulations, but I still need to mention regulation is a key enabler because it is talking about financial market. Regulation come in with a lot of good things because we need some regulators and law enforcement to promote the good actors and to get rid of the bad actors and good behaviors and bad behaviors. But regulation cannot be ahead of innovation, right? Always innovation first. Regulations will evolve itself to support it. The good things to see, like Malaysia and many other countries, are very actively looking at that and already doing it, but still early stage. Number 3, I would say money. We talk about the stable coin and the digital money. When I say the money, it means the money in a token way. Money also on chain. Because today this panel is more talking about digital assets, right? Have to relate to the money. You use money as a medium of exchange. You're using money to buy something, to invest. So financial assets, you must have some media of exchange, which is money. So the money, we see money is more and more moving on chain. So-called from the paper-based money to the electronic money today, then moving to the token money in the next phase.
Well, actually, there's a very interesting question in Slido here that says, is tokenized money key for transactions of tokenized assets?
My answer is yes. If I may say is, what's the usage of money? Basically 2, you're using money to buy something and you use money to invest into something. Buy something daily or B2B or C2C. Buy something related to the payment. If you want to use electronic money to buy something, you have the mobile app, e-money, blah, blah. Now, token money, there are some other use cases to buy something cross-border settlement, or we're using this to buy a pizza. But if the money keep in your account, in the future it's called a wallet. If the money is sitting in your account or in your wallet, you don't use the money to invest into something, you earn nothing. You earn nothing. Now the people invest, actually everybody is investing. The most popular investment is you get a bank deposit. Because the money, fiat money is in the bank. You just simply buy a deposit or the bank give interest to the money in the account. It's an investment. If you choose don't do it, $100 is still $100, 100 ringgit is still 100 ringgit.
Well, just to stop you, yes, but when you are buying a tokenized asset, you do not have to necessarily buy it with tokenized money. Right?
That's very true.
Let's just be clear here, because you can use fiat to buy tokenized assets.
That's very correct.
Okay.
Tokenized assets in the token way just a way of settlement. You can using token money to settle.
Yeah.
You can also using fiat to settle,
Yeah.
just on a proxy.
Steve,
Fully
I want to
agree.
bring you into the conversation here. So when your clients do what they do with you and your digital solution for them, your tokenized solution for them, do they pay you in tokenized money? Not necessary, right? It's all, yes, please explain.
So I think the adoption of the digital money, tokenized money, it really depends actually the client's demand and
Yes.
the client experience that they would like.
Yeah.
And if you compare, what we have today in the tokenized market versus what we have in a more traditional banking world,
Yeah.
is actually is a paradigm shift towards from account-based infrastructure or product services to a token-based, infrastructure. There are certain advantages here. For example, if you look at some of the central bank digital currency design in a tokenized format, and now if I do a wire transfer to Henry, I actually need to check my balances. I need to transfer to him. He needs to acknowledge that. Actually, there's a multiple API calls in the backend, right? But if actually in the CBDC design, some of the token-based transfer, actually there's no need to check the balances. I just need to call, and then the token will increase and decrease. So there is certain advantages of efficiency gain by this token-based money concept. But if you ask me, if you're coming from a client perspective, would it be really bother about whether that is token money or it is cash money?
Yeah.
I think that most likely they will not. And they want to have a centralized, consistent way to manage their money, and they want to have a seamless, efficient way to invest their money, and they want to actually have a user experience that is to fulfill their need for today, but also for future. And if they can log into their mobile app in the bank and they can have a look at their fiat money, but I wouldn't expect as a customer, I look at my fiat money and I will have a token money on the two separate entry. Because from experience side, I think that would be something, I would not have from customer. So now the question will be how to reach that stage, right?
Yes.
Then the technology need to develop, and the ecosystem development and the collaboration between banks and fintech players need to collectively address that customer needs.
Yeah, I'm sorry to try and interject, but we're taking questions from the floor, and it segues nicely into what you're saying, Stephen, because Bucky here is saying, what are the current challenges regarding interoperability between different tokenized systems, and how can they be addressed, right? Because everyone wants a seamless experience.
No, totally. So come back to the point on technology. And if you think about today, there are businesses that they build highways, they build roads. There are also businesses that build applications, build cars. It's the same is happening in this digital economy, digital finance here.
Yep.
So there are certain blockchain players that specialize building layer one protocols. I call them, they build the highways there. But there are also a stablecoin company, for example, like what Henry is doing, including financial services. We're actually building the application on top of that. So interoperability actually means that the road you are building has to lead to somewhere that can be connected to the existing road that we have. And that is a legacy that we inherit, which can be our greatest strength. So the interoperability between protocol to protocol, but also means interoperability between the legacy systems to the new systems as well.
Well, actually, to be fair, the interoperability between token standards has to come first, right? So not everyone's on ERC 20 or whatever it is, right? And there is again, and this is my personal pet peeve about this whole space, is actually there isn't a standard taxonomy, right? So when you look at jurisdictions, different jurisdictions treat tokenized assets differently as an asset class. They have different definitions of what these assets are and how they are then move within that financial system. So personally, I feel that first and foremost, when you start looking at interoperability, my God, if I may speak, there is the standard that's required. The regulators have to come in and agree within a jurisdiction. So in Malaysia, SC and Negara have to sit together and say, okay, this is it, right? And then Malaysia talk to Singapore, talk to Hong Kong, and going back to the earlier point made at the panel, is that the regulators need to get their act together almost in order to have a standard system that we can all leverage off. Henry, I get a feeling you want to say something.
Actually, interoperability is very, very important. Personally, I'm very optimistic about the outlook, although we can see a lot of challenges for the moment, right? But that's the way of development. When we see internet, look at the name, internet. So we talk about Web3. Web3 is still the internet, just next generation of internet. That's what I call the Web3. Then look at the Web2. Why this internet has become just everywhere in our life? Because of the interoperability. So the website, right? The website, we used to have to buy a newspaper, Malaysian newspaper, Singapore newspaper, then we get access to the information of that area. Now we have an internet, you can read the news all over the world, right?
Yes.
To form your opinion. And that's the internet. We have this SCSC seminar here, and actually the contents, the videos, the photos, people almost everywhere on the earth, they can access to it. So it's the internet. But this is Internet 2.0. Current internet is for information interoperability. We already take as a given. Then go to this Web3, so-called Web3 blockchain base. It can not only transfer information, it can transfer values in a trusted way. That's why blockchain Web3 has more meaning or fundamental meaning for the financial industry, because from 2.0 to 3.0 is not information but value. Value is asset. No matter it's money value or asset value, or even BTC, cryptocurrency, if you believe there's a value. So you can transfer the BTC. People may complain about buy too high or sell too low, but unless there's some very serious hacking thing, people don't complain, I got the fake BTC.
Yeah.
There's no so-called fake BTC. There are some, but it's difficult, very, very difficult. But actually, it's much less than the fake paper money, right? So that's the technology. So I would say interoperability is inherent value for transfer values cross-chain. Again, it's across internet.
Interoperability is key, but with interoperability is where the regulation kicks in, right? So everyone's on a level playing field. Now, I want to move the conversation to scalability and breadth of business, right? So when you look at blockchain technology and tokenized assets, how do you guys feel about scalability? You know, in your business, for example, Stephen, right? And all the trade finance that you're doing, and how has the tokenization element allowed for you to scale?
Totally, I think scalability is going to be the key here, right? So if you look at for example, our global trade business, and including the most financial service that we do have. So at one time, actually, we do originate transaction to our customers, support their growth of the business on a cross-border basis. But at the same time, we also subject to a set of the constraints in terms of capital. How can we actually deploy the capital in the most efficient way? So I think tokenization from that perspective is actually a very promising solution for us to relook at the way how we originate and distribute. So meaning actually open up our balance sheet and some of our asset classes, make it available to a wider participant from the investor community, so they can participate in the real economic growth as together with the bank. And at the same time, we actually utilize as a methodology for us to continue improving our return of the risk-weighted asset. So by doing that, then we actually support the growth of the new supply chains that is being created every day, the EVs, the computer chips, and so on and so forth. So from that scalability perspective, tokenization helps us to scale our existing business if that's being doing right. Secondly is how to scale the demand side of that the tokenization market. I think the key issue here is industry needs to come together and improve the maturity level of the ecosystem. So at this point of time, it is still relatively new. So we will likely continue to see a divergence before a convergence happen. So divergence means actually we are still seeing fragmented liquidity out there in the market. And we're still having a duplicated investment in a slightly siloed approach across different financial institutions. But I think that's for sure they will improve and consolidate, will converge.
And can I just ask, you know, in the spirit of partnership, does SE go out there and talk to other banks in order to create a larger tokenized ecosystem?
Totally, we talk with other banks all the time. So in some of the cases, for example, in Singapore Project Guardian, we have been part of that Guardian community now have 34 members. And that includes not only commercial bank like us, but also include asset managers, policymakers, industry associations. So the banks and counterparts come together. We set up the standards that is critical for scale this tokenization opportunity. And that look at across the asset class and across the asset and wealth management, across FX, across the fixed income, different type of instruments. And each of us actually will have a unique role. And it is almost impossible for such new nascent business for one bank to win it all.
Yes.
Because there are certain strengths that we have, for example, at the Standard Chartered. But my counterparts at other bank, they will be probably much more, have a greater strength. But only when coming together and form ecosystem and grow the ecosystem together, that will actually help to scale the market to a collective win rather than actually a more settled approach, a winner-take-all attitude.
And for SC specifically, I mean, if you're looking at efficiency, what is the percentage efficiency have you, how much have you gained? How much cheaper is it for you to run your business via a tokenized environment than not tokenized?
It is
legacy?
still, I must say, it is relatively hard to quantify that benefits at this point of time. So for example, at the end of last year, we have conducted a pilot trade of asset-backed tokenization with a $500 million trade finance asset-backed security token. And that is being successfully placed with 7 institutional names and oversubscribed by over 200%. And that proves that there is this established investor demand to have access to class that is digital, that is can balance their digital asset portfolio. But at the same time, we can actually improve the way that we do securitization of the trade finance asset. So cash flow waterfall has been totally automated. Some of the intermediaries, interesting, has been removed. For example, the calculation agent, the paying agent has been completely being removed by a smart contract. So that leads to cost saving for sure. But in terms of how much actually quantify that business, that's actually a quite complicated formula if you want to have that as a view, because that is still at a very early stage of initial pilot experimentation. We only have a very concrete, credible information by continue working together to establish the market and make it a scalable solution out there.
Okay,
But
I understand.
let me
Yes,
give an
please.
example in terms of efficiency saving.
Please.
Scalability is a beautiful benefit of using the new technology, so-called blockchain-based. I'll give an example. DGFT is a humble startup company. We only have 30 plus people for everything. We're holding license, so we have all the functions, right? And technology. But together, we have about 30 plus people. But when we introduced one feature, we launched some products already, about 15, 16 security tokens. It's mainly fixed income. For example, treasury bill, right? Treasury bill or money market fund. Very straightforward product. We launched one function 2 months ago, which is real-time redemption. Real-time redemption. You sell the T-bill back, you get the money back. You sell the T-bill, you get the money back. T plus 10 seconds. 10 seconds, that's real-time. 24/7. Atomic. Can be as little as $1 if you want to pay the gas fee, right? If you want to set, but technically you can settle $1, even 1 cent. 24/7 T plus seconds. We implemented it, and it's live. It is live. If you are the customer of DGFT, you can sell. We have a liquidity pool. How to do it? A liquidity pool, smart contract, auto settlement. How many people we need to run this 24/7 T plus seconds settlement? Basically 0 people. Our operation people, very humble operation team. We only have a couple people, and they don't take a night shift. We still sleep at a normal time, but need to keep the mobile phone on.
Oh, you mean there's no
Still human. But basically, who is doing it is machine, right? It's a smart contract, as Stephen mentioned. Because smart contract, what is smart contract? Nothing fancy, just programmable things, right? Give me the money, give me the asset, I give you the money. I use up the money, I tell you done. Tomorrow come back, right? So that's the way we do. So that's the scalability. And you don't mention the pool is like 100,000 or 100 million. It's the same thing, so it's a scalability. We still can keep our operation people sleep normally. But again, keep the mobile phone on. Otherwise, regulators don't
Well, yeah, they'll
go
get
after me.
upset.
So. But that's a scalability. Very, very beautiful. Very, very beautiful. And it's very doable.
And if I add on to the Henry's point,
Yeah.
I think if it's very interesting to talk about operational the part
efficiency.
of that because as Henry mentioned, actually, the kind of like human beings you need to keep the hamster, run this that bag actually become much less, and that's also something as a more traditional financial institution we should look at how this actually help us to improve our operational efficiencies, yes. Right? So one example. One of the largest stablecoins company with a market cap over $100 billion US, and it is being run, operated by a team of less than 100 people. And in comparison, if you look at a traditional financial institution on a global scale with a similar market cap, and that requires more than 200,000 employees globally to keep the light on.
Wow.
So there must be something out there, and you can say, oh, there's some processes and the legacy system keep the run, but the contrast is too big. So, and that's part of the movers and the drivers for us as a bank to look into how this digital infrastructure, this digital new technology can improve ourselves in terms of how we operationalize or optimize our operations, right? So that's a very interesting point.
Okay, so it will be efficient. People will still get to sleep. And with the right regulation, it will be interoperable. Okay? We've got 8 minutes. I would like to take more questions. There's a question here about understanding the benefits of tokenizing fixed income assets. But what are the biggest risks of tokenizing these assets, especially for the issuers? I think there's an inference with regards to the legal contract, whether it be a DR, an ADR kind of lien that the token then creates to the real world asset. Maybe, Henry, you need to take this question.
Yeah, a very important question. I just addressed it quickly. What is tokenization of assets, right? What is token? What a token can change, what token cannot change. What the token cannot change is no matter what the asset token, the token itself, tokenization does not change the risk return profile of any assets. So
or even the fundamental element of the asset, right? It doesn't change.
No change. T-bill is T-bill. T-bill token is still T-bill. So risk return profile is T-bill itself. Money market fund, same. Real estate, stocks, whatever. This is the tokenization doesn't change. What does tokenization change? Accessibility, the usability, and the efficiency.
Fractionalization.
Right? The features. Then coming to the question, what does token mean? Token is nothing different, my view. It's the ownership. It's just a digital ownership of the underlying assets. So in the human history, I would say stage 3, right? Now it's a stage 3. Stage 1, largely paper is the ownership of, is a representative of ownership. So the money in the paper way. And the real estate is in the paper way. It's called a kind of a certificate, right? And also the bond is used to be in a piece of paper. Yes. Very inefficient. Then coming to the current stage is largely electronic. Electronic, it's just a record provided by a centralized entity. How much money do you have? Bank statement. Right? How many stock do you have? The broker dealer. So that's the current stage. You change the records. Then coming to the stage 3 is in the token. So the token is the ownership of a digital representative of ownership. So in this regard, the legal structure is very important. Is token has a one-to-one ownership of the underlying assets. That's why the current legal framework or regulation come in is to ensure the documentation is to support the token represented the ownership of the underlying. That's my answer.
Yeah, so actually, the way I like to look at it, because I'm not technical in any way, shape, or form, you have a big piece of cake and you cut it up. So everyone can have a piece. That's fundamental. But the question is then, legally, how do you create an ownership link within yourself and that small piece of cake? So that's why the legal provisions are fundamental to any tokenization exercise. That's first and foremost. And an extension from that would then be the custody. For me, custody is key because that's safekeeping. We don't keep stuff underneath the bed anymore, and we can't keep stuff in our bank accounts anymore. We're just going to need to keep stuff in our wallets now, our e-wallets. Would you like to say something, Steve?
Totally. I think I cannot agree more on the part of the custody, because one of the most important things in tokenization is actually to make sure the underlying asset is real.
Yes.
And to make sure that the underlying asset is not being misused, is not being double-landed, for example. And this is very different as compared to cryptocurrency, which the tokenization requires an instant and smooth connection between the real world in the financial ecosystem to the blockchain ecosystem. And the question is, who is going to take up that role to make sure that the underlying asset is properly being managed? There's no fixed answer for now, but traditionally I think custodians can play a very key role to ensure that there's a smooth connection and make sure that the underlying asset is properly being managed. We've started to see tokenization platforms started to play that role as well. And this is some of the wallet provider, they hope they can enter the market as well. So this is an evolving space, but this problem needs to be resolved.
Yeah, I have a different take on that, because I think there is a lot of value to have check and balance. So if one entity does too many different roles, where is the check and balance? So in that sense, I think there is still a lot to be said for having different entities playing different roles.
Totally. Let's go back to the point of the ecosystem maturity.
Yes.
If one transaction being done, most of the custodians, originators, and the investor placement agents is all done by one single bank. I think that is actually probably workable for the start. But the ecosystem needs to grow together and actually address this critical issue in the tokenization market here.
Yes. Yeah, I agree. We've got 3 minutes, and there's obviously that crystal ball question that I'm going to ask both of them. However, there's a very interesting question. I don't know who planted this, but we're going to take it because I like interesting questions. Personally, D5 versus CDFI, okay? Which will move discussions forward with SC and Bank Negara? That's the elephant in the room, right? We've got only one regulator here. Based on the slow pace of progress, which route works best for Malaysia? Now, I think, being the only Malaysian up on stage, I want to say this one thing. I think we are sometimes our own worst enemies. Based on my experience working for Labuan International Business and Financial Center, where one of my key roles was to go out there and talk to the digital asset and marketplace, Malaysia has one of the most progressive regulatory frameworks ever. We have leadership in Islamic digital finance. We have leadership in tokenization. We have leadership in digital custody. So let's pat ourselves in the back and, be kind to ourselves first. I think there's a lot to be said about the need for the regulators to have some kind of a cohesive working process for the benefit of the market. But having said that, I think we've gone quite far, okay, to be fair. So I know that didn't answer the question, but I just wanted to say that to be fair to us, okay? I think we should not criticize ourselves too much. We have done a fantastic job between Bank Negara, SC, and the Labuan regulators. I think holistically, Malaysia has an incredible digital financial framework. Oh, thank you. But no, I really feel that. Now, we've got 1 minute, and there's the crystal ball question. So the crystal ball question, because we are in October, my God, it's going to be Christmas soon. Where did the year go? So, Henry, I'm going to start with you. Next year, you're going to come back to SC by SC. And how would you like to see your digitally native tokenized space have evolved by then? Right? What would you like to see have changed for the benefit of, obviously, DGFT, but also for the benefit of the larger ecosystem, whether it be in Malaysia, Hong Kong, wherever?
Yeah. First of all, I'd love to return the same session next year, and if I continue to be invited, if I didn't say something wrong today.
Well, Alex is nodding, so maybe you will.
That's the most important statement, wish list. Seriously, I would say, when we say a DGFT is like a digital native, right? But I'd rather to describe the players like DGFT is the one to bridging the current traditional finance to the future finance. Bridging together. It's not say we are kind of enemy or conflicting. No. I even don't use the word as an interrupter. No. We are the bridging. Back to the question asked, the question is CDFI. I love this question. If allow me to say that is, first of all, I don't think decentralized means deregulation.
Yes.
Totally two different things. Limit time, I don't elaborate. Second, decentralization to a certain extent means de-intermediation, just to remove unnecessary intermediaries. That's the true efficiency. Number three, centralized finance, decentralized finance are not conflicting. They are not mutually exclusive. They are complementary to each other. So we're just using the best practice of both.
Yeah, but you know, it's easier said than done because you're not an intermediary. When you're an intermediary in the legacy system, you are going to find a lot of friction, right? So it's about where you sit in that whole value chain in financial intermediation.
Yeah. Truly, I mean, some intermediaries has meaning, right? But just say, combined is the best practice altogether, not all. That said, I hope a year later, especially in this fantastic market, Malaysia, hopefully DGFT also can contribute our practice and intelligence. We do something real case. Don't expect to be too big, but I hope we're not talking about sport components. I hope we can create some minimum viable ecosystem. Closed loop. Can be small, but closed loop. A progress from the current component talk to a closed loop end-to-end.
Yes.
That would be fantastic.
And maybe a DGFT license in Malaysia. Who knows? Stephen?
I don't have the crystal ball looking to the future, but I do believe 2025 will be the first year in the era of tokenization. And I expect banks and financial institutions will have more roles to play in the tokenization space, becoming a key enabler. And due to the same reason, to me, it is impossible desirable to have a fully decentralized network for tokenization. And because of the differences between cryptocurrency and tokenization, there's a real-world link. Somebody in the credible centralized third party is needed. So I started to see that more and more banks and including non-bank financial institutions will have a greater level of participation here. I think secondly is I will expect the sandbox in Malaysia that's being announced in this summit, FinTech Summit, will become the key enabler for drive innovation in this region and not only in Malaysia. And we have already, started moving a new phase where there's a regulator-led, innovation.
Yes.
And to have that guardrails in place and the right clarity from regulator legal, it just enabled to scale the market from a proof of concept to a more commercial business. Any scalable business need to have that clarity, and now we have it today, and we'll have that clarity and more clarity in this region.
Yeah, I think in my experience as a Malaysian, working in the Malaysian financial sector, I think guardrails will always be there. And personally for me, my crystal ball gazing is that I'm looking forward to buying a tokenized bond. right? Because why should we all not enjoy capital protection at a high yield? All of us, and this is why digital finance is so important, because it's inclusive. So I'd like to thank you for delaying your lunch. And please join me in thanking this fantastic panel.